Oh, hi. I'm here with my emotional support dinosaur because in this video, we're all going to need a little extra support. Welcome to Accounting How To. I am your host, Carolyn Grimm, and that's my sidekick, Terrence. And we're here to put the fun in accounting fundamentals usually, but today may not be that day. So in this video, we're going to be talking more about merchandising businesses, and we want to get into the specific transactions that we would do for accounting class, not for real life, but for accounting class, to record both our purchases and our sales. So we are first buying merchandise and then we are selling it. So we're going to be taking a look at the transactions that go along with both of those different parts of our business. So let's dive into some examples of transactions. So for the purposes of these transactions, we are assuming that the business is using perpetual inventory. And if you've seen my perpetual versus periodic inventory, you will thank me for that. So one of the things that we need to talk about before we dig in is terms. So when we're buying and selling merchandise, we have terms like net 30 or 1% 10 and 30. So we need to talk about what those mean. So net 30 means that 100% of the bill is due in 30 days. So if you are selling to your customer, they need to pay you within 30 days. And if you are buying from your vendor, you need to pay them in 30 days. So when you see terms that include a percent, like 1% 10, net 30, or 2% 15, net 45, this is telling us that if we pay early, then we can take a discount. So 1% 10 means that if we pay within 10 days of the date of the invoice, we can take a 1% discount on that. And if we don't pay within 10 days, we get to day 11, we're now going to be paying full price and the whole of it is due within 30 days. If it's 2% 15, net 45, it means that if we pay within 15 days, we can take a 2% discount. Otherwise, the whole thing, the net, is due within 45 days. And what those terms do is it's spelling out when our vendors want to get paid and when we want to get paid. And by offering a discount, what it does is it allows us as a customer of a vendor to get our merchandise for less money, and it allows us as a company selling to a customer to get our cash in sooner. So there is a benefit to the company for encouraging swifter payment. And now I come to the part where you're going to perhaps need to get your own emotional support dinosaur. So our textbooks, at some point in time in the last few years, they started to say, assume all discounts will be taken. So if it says 1% 10 net 30, we are going to assume that that discount is going to be taken. So what it's going to have us do is we're going to adjust the cost of purchases or sales transactions based on that assumption. So if you sell something for $100 and the terms are 2% 15, we're going to assume that we're not going to get $100. We're only going to get $98, or we're only going to pay $98 if we're the purchaser. Now, this is not the case in real life. In real life, we would enter the full amount of the bill or the full amount of the sale, and then we would take or grant the discount at the time of payment, either the payment that we're making or the payment our customer is making. So this is one of those examples in accounting class where we have to do things that we wouldn't do in the real world. And it is this that oppresses my soul when it comes to accounting education. But it is what it is, and we are going to go through it so that you can do it well in your accounting class. So we're going to start with some purchase transactions, because we have to purchase the merchandise before we can sell it. Now, we've done purchase transactions before, and the basic transaction doesn't change. We're going to debit merchandise inventory, we're going to credit cash, or if we're buying it on account, we're going to debit merchandise inventory and we're going to credit accounts payable. But now we're going to add a detail to our accounts payable. Accounts payable is a summary account for all of the vendors that we owe money to. So the balance in accounts payable is made up of lots of sub-accounts, one for each one of our vendors. Now before, when we did an entry that involved accounts payable, we just said accounts payable. But now we're going to add some details so we know who it is that we owe money to. Now in real life, we'd be entering bills from our vendors under the vendor name directly. But for the purposes of accounting class, we're going to tack on a name. So we're going to say debit to merchandise inventory and a credit to accounts payable - Clean Dino, the company name. Let's do a sample transaction using Clean Dino. Now, as I'm sure you know, Clean Dino is the leading manufacturer worldwide in the Dinosaur shampoo category. All their products are cruelty-free and hypoallergenic and gluten-free. And we're going to purchase some of their product for our health and beauty section at the Terrence store. So here's what we're buying. We're going to buy 100 cases of assorted flavors of shampoo for $1,500. Clean Dino's terms to us are 1% 10, net 30. So if we pay within 10 days, we can take a 1% discount. Otherwise, we need to pay all of it within 30 days. Now, if for just the moment we ignore the discount, our entry would be merchandise inventory $1,500 and accounts payable - Clean Dino for $1,500. And then when we pay the bill, we're going to debit accounts payable Clean Dino for $1,500 and we're going to pay $1,500 in cash to settle our bill. Next, we'll look at how the transaction changes if we bring terms into it. So we said our terms were 1% 10, net 30. So because our textbooks have gotten weird on us, we are going to assume that we are going to take this discount. So when we enter our merchandise inventory amount, rather than $1,500, we're going to enter $1,485, which is the cost that we would ultimately pay for this merchandise if we were taking that discount. So we're going to enter this at $1,485, which is $1,500 minus 1% of $1,500. So we're getting a $15 discount here. And then we're going to enter accounts payable at $1,485 for Clean Dino. When we pay the bill, now we're going to debit accounts payable for $1,485, Clean Dino, and we're going to credit cash for $1,485. And that clears our account, assuming that we paid within the discount time. Now let's say we didn't pay the bill within the discount time. Right now, our books show that we owe $1,485 to Clean Dino. But because we didn't pay within the discount period, now we're going to have to make an adjustment in our books. So we didn't pay $1,485 for this merchandise. We actually paid the full price of $1,500, but in our books it says that we only owe Clean Dino $1,485. We're going to pay them $1,500. If we were to do a journal entry, accounts payable $1,485 and cash for $1,500, what would happen? We would not be in balance, and that would be bad. So we have to add something else to this journal entry. What we need to do is we need to recognize that we spent more for our inventory than we originally thought we were going to. And this is why this gets really messy with this little textbook change that, by the way, I don't know if you picked up on this, I don't like it. So we have to add to the cost of this merchandise. So we're going to debit merchandise inventory for that lost discount, $15. So now we've emptied out our accounts payable and we have recognized that we are spending $15 more than we thought we were going to spend. Now let's add a wrinkle to this. Let's say we returned some of the merchandise before we paid the bill. We returned $100 worth of merchandise. So let's look at what that entry would be. So we're going to credit merchandise inventory because we're taking that back out of inventory. And we're going to debit accounts payable for Clean Dino to reduce the amount that we owe them, because we owe them $100 less. Oh, but wait a minute. We already booked the discount on the entire amount. Now what do we do? So instead of doing that full $100, what we actually need to do is we need to take into consideration that we took a discount on that amount already. So what we're going to do is take the $100 and discount it by the 1%, and that's going to give us $99 as a debit to accounts payable rather than $100, and a $99 credit to merchandise inventory. Then, if we pay that bill within terms, we're going to be debiting accounts payable for $13.86. So that's the $14.85 from the original transaction minus the $99 for the return. And then the other side of that will be cash credit $13.86 because we're paying the bill. But Carolyn, you say, what if we didn't pay within terms? What do we do then? That's when you get out your emotional support dinosaur. No, that's when we have to do a little more fancy accounting. So here's what we've got to do. We need to recognize the change in the cost of our merchandise inventory. We need to empty out our accounts payable for Clean Dino, and we need to recognize the amount of cash that we are spending to pay this bill. So right now in accounts payable, what we have is $14.85 minus $99. So the original amount that we booked minus the return for $13.86. So we're going to debit accounts payable to get rid of that. Now we also are losing out on the discount that we've already booked. So now what we need to do is we need to add the difference in cost between what we would have paid if we paid within terms and what the full amount was that we're now paying. So originally the amount was $1,500 and we returned $100. So we owe Clean Dino a total of $1,400. The difference between the two is the amount of the discount that we gave up, which we now need to put into our merchandise inventory because it is a cost of purchasing that merchandise. So the $14 comes from the $15 that we originally took minus the $1 for the return to give us $14. Now, where does that leave us? Well, if you're like me, it leaves us curled up in a fetal position, clutching our emotional support dinosaur. That's where we are. But here's the good news. So I've done a sample homework problem for you, and you can download it and go through step by step and use it as a guide for helping you understand your homework. I know, right? So if you check out the description of this video, you'll find that spreadsheet and you can download it and go through it step by step as you're going through your textbook, and it will help you to sort out your homework. Now for sales transactions, you can check out the video that goes along with this purchase transactions video, and you can get the whole picture, both sides of these transactions. So join me over in that video if you haven't watched it already, and until next time, stay balanced, my friends.